Today I began shorting my favorite bond fund. I also began shorting crude oil. Remember that bond prices and yields have an opposite relationship. So here we are on the 10-year yield. So far as of about 2:30 this afternoon, making a confirmed breakout above 4.43%. I mentioned yesterday to watch this level. So assuming it stays above 4.43% by 4 o'clock this afternoon and confirms the breakout, the 10-year yield could easily run up to 4.54% when yields run higher, bond prices run lower. That's why I am now short my favorite bond fund. I get it, I don't tell you exactly how because the state of Florida calls that results-based advertising. I don't get into that, you know that. If you want to know how I made the trade, click that little red email icon in my bio. I know I've talked about possibly shorting crude oil for quite a while here and stressing patience until we get a good setup. If you've been watching my videos, you know that I wanted to short crude oil if we could get really close to about $64.42 a barrel. And I have said in the past, yeah, you can argue that I've missed, that last one or two opportunities. And you know what? It hasn't mattered. Crude oil came up today, didn't get right to $64.42, but got close and got back up to that price point where in the past it has come down. So I said, hey, you know what? I think it's an okay place to start a short position on West Texas Intermediate crude. Again, if you want to know how I did it, reach out to me. Mom and Dad have largely led this bear market rally. The hedge funds are generally still not buying the Magnificent Seven. Hedge funds' long to short ratio on the Magnificent Seven stocks is now at its lowest level in 5 years. Incredible. This is per Goldman Sachs research and reposted by the Kabasi letter. This is even lower than the 2022 bear market bottom. Whoa. Hedge fund exposure to the Magnificent Seven stocks is now down about 50% from where it was last year. But I get it. Mom and Dad haven't cared about the fundamentals. They're purely riding on emotions. And for me being short for the last month, yeah, it's been the wrong thing to do. It's been tough. Even while it seems like most of the news out there has been more bearish over the last 2 weeks, doesn't matter. Stocks just won't come down. We have higher tariffs, higher interest rates, more global tensions. Look at the buildup in the Ukrainian-Russian war on Sunday. Nobody seems to care. It's unbelievable. We have less rate cuts expected, a more hawkish Fed, and Mom and Dad just buy the dip. It's absolutely amazing. At this point, it seems like momentum and sentiment are kind of really all that matters. I understand that. Sentiment has arguably come too strong to fight here in the near term. What's different now between what was happening 6 weeks ago is the markets seem to be more worried about not being long than they are about being short. And hey, you can't fight that. So as of the end of the day today, yes, I still own all of my short positions. Yes, they are beat up. Yes, I am insanely close to having to start to get out of those positions, but with a administration that just won't let the market go down, a Federal Reserve that is kind of secretly buying bonds. It's not really in the news. They're not really talking about it, but the Fed is helping to keep this stock market up. Yeah, I've been wrong being short over the last month. On the S&P 500, the SPX as of about 237, yep, the price action was above that prior bear market rally high. And again, fundamentally, this is still a bear market. All of my lines still apply here. I say we go to 0.1, 2, 3, then 4. But again, sentiment might make all of this worthless. As of about 2:34 here in the afternoon, gold down about 8 or 0.9%. I still own my gold trade with a confirmed breakout here again above the $3,320 an ounce level. Without breaking down from that, I'm happy to hold my long gold trade. This is the last video that I'll do from my office for quite a while, until at least the day after Father's Day. I'm headed to Italy with my family tomorrow. Yes, I will still be doing videos when I can. I will absolutely still be updating my members with research and commentary and trades and whatnot. And I hope to bring you some of the beautiful videos from Sicily and Positano in the Amalfi Coast. I appreciate you being here with me, and I look forward to being with you again real soon from Italy. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.